Hey everybody, Boris with BK Forex. Welcome to the majors for Eurodollar, dollar yen, pound dollar for December 11th, December 15, 2017. The dollar moment. This is really the final major week of event risk in the calendar for the rest of the year, and it's really going to be all centered on the FOMC. Before we get to the event calendar, let's take a look at the levels. Levels have slipped a little bit as the dollar has progressed to the upside. Euro now is a 119 offer, 116 bid. 16 is the support. It really slipped down away from that 20 level now towards the 119. Dollar yen really pushed up, held the 112, and now is very comfortably perched, looking for a move to that 114.50. The yearly highs around 1,400, 1,500. And cable did an about face because of it was a sort of a sell the news moment in cable today, as the deal on Brexit actually created a sell rather than a buy. The pair still holds around the 32-36 level, but we could have a lot more churn within that zone. So looking at the calendar this week, we basically really only have primarily U.S. and U.K. data with just a smattering on the com dollar side. But on the U.K. side, on Tuesday, we have the CPI data, the PPI data, which is going to inform a little bit, of course, the Bank of England decision. But none of it, I think, is really as material as, of course, the Brexit news. And that's why all the economic data out of UK takes second stage to whatever the next developments in Brexit that are going to be occurring. The fact that Theresa May's government essentially caved on almost all demands can be viewed as either positive or negative. In the sense that it's a positive, because I think ultimately for the economy it's much more constructive. But the question is whether she's going to be able to weather the political storm back home on essentially giving in to all the concessions to the EU and paying a significant hefty sum for the divorce. We'll have to see how much of an impact that has. All of it, though, when you're looking at it from a UK point of view, certainly suggests that the Bank of England rate decision, which is on Thursday, right over here. Let me pull this up. Sorry, the Bank of England rate decision on Thursday. The CPI, the labor numbers, all of those things are going to matter not at all. It's really going to be as neutral a position as possible. I doubt very much that the Bank of England is going to essentially go all systems out now the Brexit deal has been kind of cleared, because their primary interest, of course, is to make sure that they don't disturb the credit climate or exacerbate the credit climate in a period of already fraught with full transition. So to me, it's going to be a pretty dovish structure out of UK this week. Fed, on the other hand, which comes in on Wednesday and is really the central pivot for the whole trade this week. You know, we start with the CPI numbers, which is going to be interesting because, of course, they're going to inform the Fed on Wednesday before we get the FOMC rate decision. But I think, of course, the Fed is going to try and look past whatever the short-term data is. And the short-term data, frankly, they're looking for essentially very, very little. Year-over-year run finally above the 2% on a nominal basis, but ex-food and energy still underneath the 2%. And if we sort of come in on the expectations of what the forecast is, it's really hard to make a super bullish case for the dollar. But nevertheless, it's all going to be in the tone of the Fed. And I think the tone of the Fed really should likely shift more hawkish. In fact, the biggest surprise at this point would be a relatively dovish tone out of the Fed. So the market likely is going to buy up the dollar ahead of the meeting. And we have to see what the meeting itself says. But if the Fed does communicate the idea that they are now on a path towards a more sustained and consistent rate hike cycle against the background of everywhere else in the world, this really becomes a net positive dollar and could actually be the catalyst for fresh yearly highs if their message is strong enough. That's really going to be the big question. Followed by the Fed, the secondary piece of data this week that'll be of interest is the retail sales on Friday. No, sorry. This is Thursday. Here's Friday. Right over here. Here's the Friday retail sales, which are, or maybe I'm wrong. I'm sorry. The retail sales, both in UK and US, are actually going to be on Thursday. My apologies. Those are important simply because the two big headwinds to a bullish dollar scenario is lower inflation, lower retail spend. If both of those begin to just pick up even a little bit, the delta turns positive. That should be net positive for the dollar. So bottom line is everything pivots on what the Fed says on Wednesday. We have all this pre-data, both on the inflation side and then post-data on the retail spend side that could inform and support or mildly negate the thesis afterwards. And against all that, we have the UK, which is expected to be relatively dovish in order to basically maintain peace in this post-Brexit agreement world. Taking a look at the charts, though, this is where it gets interesting. So you could see the dollar strength really begin to materialize this week. This was the first week. This is dailies, right? The first week where we had the euro just fail. If you look at this technically, what's interesting about the euro is that we had a lower fail here. The high here was around 1961. The last fail here was around 1940. Lower high fail, a second lower high fail. It's a pretty negative technical construct. It basically says we don't have enough juice here to take out the highs, and the failure to lower high suggests that we could really distribute all the way down to the support level at the 1600 level. Let's take a look at the weeklies because it's worthwhile taking a look at the longer term chart. And you can see how in the weeklies, the signature of a lower fail is even more pronounced, and the support in the weeklies comes in right here, about 170 points below, and it really looks like a lower double top formation. So technically, the data is confirming that we're now starting to see a perk up in the dollar rally. And of course, you can see that inversely here in the dollar yen story, where on the weekly especially, it looks quite bullish. The weekly candle here, pretty much at the weekly highs on the close, it's a bullish send. And to me, it suggests that I think the strongest trade front of the week is pro dollar yen into the FOMC on the assumption that the Fed is going to be mildly more hawkish. At least that's what the market seems to be anticipating. That's what the price impulse is saying to us. And we don't have any materially opposing data to that to kind of knock out that thesis. Of course, there's always risk aversion flows. There's possibility of North Korea. There's possibility of any sort of geopolitical conflict. And there's even possibility of a Bitcoin crash that they could precipitate a sell-off in dollar yen. But none of those are kind of forecastable ideas. What is forecastable on an economic basis is it seems to be that the market really is geared towards a pro-dollar move for the next week or so on the Fed assumption. Looking at this technically, you see a higher low, a very nice base, and almost a coiled spring ready to take out all of these highs, the 217 highs around the 114.50 level. If we take out the 115 on a closing basis next week, that'll be a very bullish impulse into 2018, and you'll hear a whole bunch of analysts suddenly get very positive dollar, and everybody's going to start talking about a $120 into 2018. And then last but not least, here's cable kind of this is a weekly, it's sort of doing a small fail here. Let's take a look at the daily because the daily really shows a nice churn that we've seen this week. So this is a pretty bearish candle, honestly. I mean, this is, we didn't break the lows here, but of course it feels like we're going to challenge maybe the lows here at 3,300. This was a classic sell the news candle. We did not clear the 36s. We failed at the lower high, and if the Bank of England comes in and kind of just punches the guy when it's down by saying, hey, yeah, we're not going to raise rates for the foreseeable future. We see rates staying staying at this present level for a long time. We really could unwind right back down to the 132s. So cable to me, so if yen is the strongest long, cable looks to me like the strongest short as we start the week. Both of them based upon the positioning ahead of the central bank decisions. That's how the week starts off. I wish you guys the best of luck, the best of trading. Boris, over and out.